Well, for more on the U.S. stock market, I'm joined by Chris Versace. He's the Chief Investment Officer of Tematica Research, an investment and research firm. Welcome back, Chris.
Oh, thanks for having me.
So let's start with short selling. Why is this practice still allowed, given how it endangers companies?
I don't know that it endangers companies. I mean, if we think about why people invest, they're trying to make a profit. You can make a profit when stocks go up, and if you understand the deteriorating fundamentals, you can actually position yourself to take advantage of that. So that I don't think that we're betting that companies are going to go out of business per se. I think people are just looking to use another strategy, one of many, to generate a profit for themselves or their investors.
So you think short selling gets a bad rap then?
I do think it gets a bad rap. I mean, look, there are times when we're long in the business cycle, almost like we are today, and we're seeing fundamentals fall apart. We might see companies that are overly valued where they should, based on where they should be, either in the business cycle or the fundamentals of their core business. That's an opportunity for the prepared investor. Having said that, shorting is a high-risk game. You can be fundamentally correct, but the market, like you pointed out, could continue to climb higher, and that could put you in a bad position. And I think it's one of the reasons why we're seeing, more hedge funds close this year, because their short book or their short bets haven't worked out for them.
Now, it's interesting because September is coming to a close, and historically, that's a month where you tend to see it be the worst month for U.S. markets. Not the case this year. What's happening?
Well, I think it's a couple different things. I think one is no matter what is going on, right? The VIX or the volatility index has been very low, almost Teflon in nature. Nothing is really knocking it off. And I think everybody's waiting to see what is going to happen. And what I mean by that was we were waiting for the Fed to come out. Okay, so the Fed came out, they said, oh, we're going to raise interest rates later this year, kind of as expected. They surprised us a little bit, however, right, saying they're going to raise 3 more times in 2018 as they cut their economic forecast. So I think people are saying, not really sold on this yet. The other things we've been waiting for, and which we just got this week, was tax reform. And the question is this going to happen? Kind of scant on details once again. And if you look at the market's reaction, the market didn't really move one way or the other as some of these details started to come out.
Now, the markets do seem to be like an unimpressed teenager. It really is taking a lot to move them, it seems, this year.
Yes.
Now, we know that the government does seem to be stuck in the mud in terms of really getting some of these policies through. So how is Wall Street then reacting to some of the stagnation that they're seeing in Washington?
Well, the market's always forward-looking, but to your point, the beginning of the year, we were going to get healthcare reform, and that we went through 4 or 5 iterations of that. We were supposed to find stuff out on infrastructure, and even though we just got started to get tax reform, this week, we were supposed to get it first in May, then in August, and it keeps getting pushed out. And I think meaning the market, has come around to saying, we're not going to be like we were in the first quarter, which was, oh, a lot of things are going to happen. This is going to be great. Instead, I think it's taking a more measured wait-and-see approach to see what does get done.
Now, speaking of President Trump's tax reform, still a proposal at this point.
Yep.
How important is this, though, to the stock markets?
Well, if we think of it this way, right, the stock market is trading around 19 times earnings, well above the 5- and 10-year high. So what is it looking for? It has to see something in the future. One of those things could be the impact of tax cuts, which will hopefully put more disposable income in people's pockets. Remember, the U.S. economy, directly, indirectly, 2/3 driven by the consumer. Now the question becomes, Trump put these policies out over here, but, are we going to move this way towards some compromise so the 25% pass-through rate may not be, what the final rates are? We will see. But, the market, I think, is waiting to see, again, what do we actually get?
So at the moment, are they kind of pricing in the idea that they believe something will pass?
It's hard to say. I think if we were just hearing this for the first time, I think the market would. But I think that there's a couple things. One is, like we said before, we've seen a lot of hope, but not a lot of delivery. The second thing, too, is we have seen GDP expectations start to creep down. A lot of that is going to happen again in the next couple of weeks when we actually start to get the data on the economy, given what we've seen with Hurricane Harvey and Irma. The odds are, the economic revisions will continue to fall.
Now let's look at cryptocurrencies, either fantastic or a fraud, depending on who you're talking to. So for some of these Bitcoin-based equities that can be purchased by stock market investors.
So they've been huge runners this year.
What should they be bracing for? Some people are expecting a bubble. What do you think?
Well, you know, anytime we have some new technology come out, there's a number of different players that try to win the game, so to speak. And in this case, we have some early winners, you know, Bitcoin for sure, but we're seeing a lot of pushback on and I can never get this word right, so I apologize, anonymity that is afforded this. And, you know, I think we're going to start to see a new layer of cryptocurrencies come out that are working with banking laws, and, you know, the crypto aspect of it, the anonymity that lets the quote-unquote bad actors get away with things won't be there. And I understand that one of these is going public Saturday night in Hong Kong, AML Bitcoin. So that might be something to watch. If these Bitcoin 2.0s are able to grow and take share, this could take some wind out of the sails that have powered these other Bitcoin products higher.
Certainly something to watch for.
Yes.
Thank you. Always good to have you on.